In this video, we are going to talk about the top 10 best monthly dividend stocks to buy now. So before starting, please like this video and subscribe to this channel for weekly updates. Let's get started. A few recent retirees experience difficulties once they stop receiving a regular paycheck and begin living off of their investment portfolio. For these people, unavoidable costs and daily market volatility can occasionally lead to hard decisions, such as whether to sell a good stock at a bad time just to pay the bills. However, there is an alternative to slowly depleting your savings to cover your retirement expenses. With this tactic, dividend stocks, bonds, and other assets are used to generate regular income. Because they provide cash flow every 30 days rather than every 3 months as is customary on Wall Street, monthly dividend stocks are becoming an increasingly popular option for income investments. The following 10 stocks pay monthly dividends, and while there is risk involved, as with all investments, they might be worth considering for income-focused portfolios. Number 10. Realty Income Corp., ticker O. Realty Income is probably one of the most popular stocks with investors focused on creating solid monthly income streams. The whole identity of the company is predicated on the fact that it delivers a monthly dividend, and has been doing so consistently since its incorporation. It even brands itself as the monthly dividend company. Realty Income owns commercial real estate that it leases exclusively to Grade A tenants on long-term leases of typically 10 years or more. Realty Income makes the Grade 4 out list of the best monthly income dividend stocks because the company's portfolio is in great shape, owning over 11,400 commercial properties with a 98.9% occupancy rate, and 1,100 tenants operating in 72 separate industries. While delivering a yield at the lower end of our selection at around 3.97%, Realty Income is a solid player that makes sense in any portfolio. Number 9. STAG Industrial Incorporated, ticker STAG. Staying with the theme of REITs, this is another monthly dividend-paying stock that is widely considered a good inflation hedge, making its inclusion in this list a no-brainer. STAG Industrial owns industrial, logistics, and warehouse real estate. These niches have performed particularly in recent years well as the retail economy continues to migrate more and more out of brick-and-mortar shops and into the online e-commerce space. With a current market cap of $5.6 billion, growth prospects for STAG look pretty good, and the forward dividend yield is stable at 4.16% as of August. Adding some exposure to prime well-managed logistics and industrial real estate occupied by Grade A tenants seems like a good idea for investor keen to hedge against inflation and earn a decent clip at the same time. Number 8. Agree Realty Corporation, ticker ADC. Agree is a publicly traded real estate investment trust or REIT. If you're unfamiliar, this special class of corporation is granted preferential tax treatment to facilitate its capital-intensive operations. And in exchange, all REITs must deliver 90% of taxable income back to shareholders. Agree is primarily engaged in net leased retail properties, meaning tenants pay for the upkeep and taxes while ADC just cashes the rent checks. Its diverse portfolio spans 45 states and comprises 21 million square feet of gross leasable property, with tenants such as Walmart Incorporated and Home Depot. That makes for a stable operation that can support regular monthly dividend payments to shareholders. Agree Realty core dividend yield is 3.7% as of September 2022. Number 7. APLE Hospitality Incorporated, ticker APLE. APLE Hospitality REIT has a diverse portfolio of upscale hotel properties that span almost 90 different markets in 34 states. These properties are branded under the Marriott, Hilton and Hyatt nameplates and include locales such as Boca Raton, San Diego, and New York City. With pent-up demand for travel in the wake of the pandemic, APLE has seen strong revenue lately and its stock has responded in kind. APLE Hospitality REIT shares are down just under 5% year-to-date, which is pretty darn good considering the S&P 500 is down about 18% in the same period. APLE Hospitality REIT's dividend yield is 5.4% as of September 2022. Number 6. Cross Timbers Royalty Trust, ticker CRT. Cross Timbers Royalty Trust is the smallest stock on this list at just under $150 million in market capitalization. However, it is a monthly dividend stock in the energy space that's worth a look because of its partnership model that slowly brings its energy reserves to market and delivers the majority of the profit from those sales right back to shareholders. At the end of last year, CRT boasted 2.5 million barrels of oil and 14.3 billion cubic feet of natural gas underground, so there are ample resources left to ensure continued payouts for a while. And with a generous yield among the largest on this list, this monthly dividend stock is worth a look despite its small size. Energy prices remain elevated in 2022 and chances are this small-cap stock will continue to provide big dividends in the near term. Cross Timbers Royalty Trust's dividend yield is 8% as of September 2022. Number 5. Gladstone Capital Corporation, ticker, GLAD. Gladstone operates much like a venture capital fund or private equity firm, searching out profitable investments in other businesses and passing a piece of the profits on to shareholders. It is primarily focused on small opportunities, through investments ranging from $7 million to $30 million apiece. Its portfolio includes positions in restaurants, manufacturers, technology enterprises and others. The diversified debt portfolio helps to deliver consistent payouts every month that is roughly 5 times that of the typical S&P 500 stock. Gladstone Capital Corp's dividend yield is 8.3% as of September 2022. Number 4. Horizon Technology Finance Corporation, ticker, HRZN. If you want the stability of a monthly dividend stock that delivers consistent income but you also want the potential for growth, consider Horizon. As the name implies, this financial firm invests in high-tech and high-potential startups, including medical technology and green energy opportunities as well as traditional electronics and software. Though a rough environment has caused HRZN to drop about 20% this year, that's not as bad as some other tech-focused opportunities and is similar to the rest of Wall Street. The generous monthly dividend is a good hedge against further declines, however, and the growth-oriented business could set investors up for growth if and when bluer skies return to Wall Street in the coming months. Horizon Technology Finance Corp's dividend yield is 9.9% as of September 2022. Number 3. LTC Properties Inc, ticker, LTC. LTC is a monthly dividend stock focused on one of the most stable businesses out there: senior housing and skilled nursing facilities. These are recession-proof expenses as loved ones continue to pay for aging family members' care in any economic environment, resulting in a highly reliable revenue stream for LTC. Thanks to this risk-off appeal, LTC stock has raced up more than 25% since January 1st, even as the rest of Wall Street has struggled in 2022. That's not including the generous dividend, which has continued to roll in and add a big monthly payday on top of this share price return. If you want a regular payday with stability, this stock may be worth a look. LTC Properties Incorporated's dividend yield is 5.2% as of September 2022. Number 2. Pembina Pipeline Corporation, ticker, PBA. Pembina Pipeline is an oil and gas infrastructure and pipeline company that operates mainly in Western Canada. So far in 2022, Pembina has provided investors with a powerful 1-2 punch of a rising stock price and regular monthly dividend of about 16.5 cents per share. Pembina shares are up more than 20% year to date, thanks to soaring oil and gas prices. The ongoing conflict between Russia and Ukraine suggests energy prices will likely remain elevated for the foreseeable future. Pembina has also said it plans to raise its monthly dividend by 0.75 cents, or 3.6%, per share once it completes a joint venture deal with KKR, likely in the third quarter. Pembina Pipeline Corp's dividend yield is 5.5% as of September 2022. Number 1. Broadmark Realty Capital Incorporated, ticker, BRMK. Broadmark Realty Capital is a REIT that provides financial services for real estate investors and developers. The company offers short-term, first deed of trust loans backed by real estate to fund acquisitions, renovations or development of residential or commercial real estate. Since its inception in 2010, Broadmark has funded more than 1,200 real estate loans and deployed $3.8 billion in capital. The company has a $1.6 billion active diversified loan portfolio with exposure to properties in 20 U.S. states. The portfolio consists of 227 active loans with an average loan size of about $7 million. Broadmark Realty Capital dividend yield, 12.3% as of September 2022. Which of these monthly dividend-paying stocks do you think are good investments? Let us know in the comment box below. And don't forget to please like this video and subscribe to this channel for our future updates. Thank you for watching.